Hello, and welcome to our commentary on the third edition of the Credit Market Pulse, the April 2014 edition. In this publication, we've actually examined some new highlighted region, Brazil, Russia, and Ukraine, and we also see some common themes from previous issues recurring. To start off, Marcel Heinrichs will tell us about the new region.
Thanks, Thomas. And what our research shows is that for these three emerging market countries, the Ukraine, Russia, and Brazil, credit risk trends currently know only one direction, which is up. Starting with the Ukraine, the average PD for Ukrainian publicly listed companies is currently at 17%, which means that according to our model, 1 out of 6 companies in the Ukraine will default over the course of the next year. This is mapped to a CCC credit score, possibly the worst that we've ever seen in history. With regards to Russia, it's not as gloomy as that, but the credit risk goes up in that country too. It reaches a level of slightly above 3% now. It's a consequence of capital outflow from the country, which currently sees unprecedented levels. The IMF reported recently that around $70 billion have already outflown out of the country, and it may exceed a record level of $140 billion this year. Clearly a sign that credit risk deterioration may continue further in Russia, and our model certainly goes in that direction. Brazil is at a completely different level. PDs are currently at around 1%, but the median PD just 3 months ago was at a mere 0.24%, which means that even if in absolute terms Brazil looks much better than Russia, never mind the Ukraine, in relative terms credit risk has quadrupled, and 1% is what we map to a BB, which is a 3-notch lower than the BBB median credit score that we observed for this country 3 months ago. So also in Brazil we see credit deterioration. Now let me move from the emerging market countries to developed economies and how we assess credit risk from an equity index point of view.
Yeah, so on that front, I guess, same story with the S&P 500. We see telecommunications firms with the highest PD levels in aggregate. Frontier Communications at the top there. We added the FTSE 100, which is exciting. We have a European index this time. Not exactly the same story with the FTSE 100. Actually, there, the strongest sectors are materials, healthcare, and utilities. In fact, is that the same story across the board?
Interestingly, yes. If you move away from these industry-specific indices and aggregate on a country level, for developed economies, we consider North America, Western Europe, and APEC mature separately. We see that credit trends go up there too, meaning that we see some minor deterioration in comparison to 3 months ago. However, we are at levels that we've seen throughout the year in 2013. Therefore, it's nothing too much to worry about, and most likely the slightly increased credit risk in comparison to January is not really due to the fact that there are deteriorations in these regions or developed economies themselves, but it's more of a spillover effect from emerging market countries that are currently struggling a lot. And with that, Thomas, can you talk a little about individual companies that struggle across the globe?
Yeah, I think 3 points are interesting that we've found. Actually, there are several additional points, but I'll highlight 3 things from that section. One is, airlines aren't kind of the predominant set of companies in the highest PD section. We actually see telecommunications firms showing up a lot. NII Holdings, which is the Nextel name in Latin America, actually has been in all 3 reports on the highest PD level. It's now, as of the writing of the report, over 40%, and there are lots of bad news going on there. In terms of Brazil, actually the companies that we see in Brazil on the improvement section, so these are companies with the biggest improvements in credit, are consumer discretionary firms, so maybe a lot of kind of positive spirits around the World Cup. Conversely, consumer discretionary and consumer sectors in Europe and the U.S. Are actually struggling a bit, with Carnival actually showing up twice on the biggest deteriorations list. And finally, in APAC and the Brazil, Russia, Ukraine region, we're seeing materials and industrials, some of these kind of heavier sectors that maybe are affected by potential slowdown in growth expectations in China. So all around, a lot of kind of common themes and news stories in the report. And thanks a lot for joining us.